Good afternoon all. We have the management of Titagarh Wagons with us, represented by Mr. Umesh Chaudhary, the Vice Chairman and Managing Director, Mr. Anil Agarwal, Director of Finance, and Mr. Saurav Singhania, Group Financial Controller. We'll have initial comments from the management, followed by Q&A.
So, very good afternoon, everybody. I'm Umesh Chaudhary, I'm the CEO of Titagarh Wagons, and I'm joined by our CFO, Mr. Anil Agarwal, and Group Financial Controller and Vice President Strategy, Saurav Singhania. Thank you, everybody, for joining this Q3 earnings call of Titagarh Wagons. I guess, I had already covered in the last call the updates as far as the post-COVID situation for our industry is concerned, but and much of the performance has already been captured in the presentation that has been circulated. But I would just like to give an overview of the business, and rather than repeating the numbers, just give a kind of a stock check of the environment. So, just as a recap, now the company Titagarh Wagons operates in different segments. So one is the freight mobility, which is the wagon business. The other is the transit and propulsion, or the people mobility, which is the metro and propulsion business. The third is the water mobility, which is the shipbuilding business, and the fourth is the road mobility, which is the modular steel bridges. As far as the freight business is concerned, the rail mobility business is concerned, the performance has been pretty stable over the last 5 or 6 quarters. Apart from the quarter that was hit by the COVID, we've been able to consistently deliver the numbers that we had anticipated. Post the merger of Timco with Titagarh, we have enhanced our capabilities for the freight wagon manufacture in our plant in Calcutta, the Titagarh plant, where we are trying to make that as the center of excellence for the wagon production. Whereas the Bharatpur plant, while we will continue to make some quantities of wagons there, but small quantities, we will develop that primarily as the defense and the services. When it opens up maintenance services, we'd like to develop maintenance services there and defense business there. The other business, which is the passenger mobility, that is the Pune contract, its execution is going on very well. The production is already started for the prototype in our plant in Italy, and we are expecting the first train to be dispatched from Italy in May 2021. We have targeted the first train to be produced in India in our plant in Uttarpara, which is being set up in August 2021, and we want to coincide this with the 75th year of Indian independence as the first Make in India aluminium coach that will be produced. We recently had our design center inaugurated by the Secretary, Ministry of Housing and Urban Affairs, in January. We have set up a design center in Hyderabad, which will work very closely with the design center in Italy to indigenize the designs for the railway rolling stock and the metro rolling stock in India, and which will be our big step towards making ourselves Atmanirbhar and towards harnessing the full potential of Make in India. Apart from that, we saw in the budget couple of days ago, a lot of impetus has been given on the different metro projects all over the country, which we will hope to participate and be competitive. The development of the propulsion business along with ABB is also going on fine. We expect the prototype to be delivered in about July or August 2021, and thereafter the series production to start by the end of this year. As far as the shipbuilding business is concerned, we have participated in several tenders where we are very well placed, and while we had executed the previous orders, we are expecting new orders to come our way. as and when they are finalized, and we shall report the same as soon as they materialize in the near future. The bridge business again was effectively the joint venture which we had with Mathieu, which was then turned into a subsidiary, and we have received our first contracts from NHIDCL and from certain PWDs in Maharashtra, West Bengal and others. So that's a business that is yet to pick up great momentum, but we do believe that we have now an order book of about 70-80 crores in that business, but we believe that we will be able to scale up that business over the next year or two. So that's in effect the overview. For the defense business, we have, I just mentioned that Bharatpur unit we'd like to dedicate towards defense. So we just got our a small contract for about 30 odd crores for defense shelters, which the production has just started in Bharatpur unit. We have participated for larger tenders for similar or equivalent type of defense equipments, and we are pursuing those to be produced in Bharatpur works. So with these few comments, and as far as the financial performance is concerned, that is already given in the presentation, but I'm most happy to take questions, and I'll try to answer them to the best of my ability. I just want to give a brief overview on the overseas operation. On the overseas side, Titagarh our Italian subsidiary, of course, started recovering from the aftermath of the COVID crisis, and is now slowly, just when it was starting to stabilize, the second wave hit Italy, and then there was the Christmas New Year vacation. But now the situation is starting to stabilize there, and we were able to ramp up production to some extent in the month of January. But we are pretty hopeful that from February onwards, we should be able to maintain and grow the production there. We do have a decent order book, and there are several tenders in the pipeline where we are well positioned. We are waiting for those tenders to be finalized. So while in December 2019, we had turned EBITDA positive in the company, but due to the COVID crisis, the company has incurred losses. And if you would see that in the current quarter and the current 9-month result also, the Indian operations has done reasonably well. It has done an EBITDA of more than 100 crores in the first 9 months. But the Italian operations continue to lose money, which was primarily accentuated due to the COVID crisis. We are very hopeful that 21-22, the Italian operations should also become a positive contributor into the company's consolidated balance sheet as far as EBITDA is concerned. And we are also trying to get it net positive, but we are fairly confident to bring it back to EBITDA positive in the coming financial year. So with these comments, I would open up the floor to any questions, please.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please press star followed by 1 on your touchtone phone now. We have a first question from the line of Agastya Dave from CAO Capital. Please go ahead.
Hi, Umesh, can you hear me?
Yes, I can hear you. Yes, absolutely.
Hi, thank you for the opportunity and thank you for the call. Sir, my questions are related to the budget. There are certain things which I'm unable to understand because of this corona effect that we have had on spending. So if I look at the rolling stock allocation last year, they have said in the budget it was 5,786 crores, and the revised estimate is saying 2,000 crores. So and for the next year, they have allocated 6,800 crores. So how do I read this? Will there be some problems with the receivables for this year? And if I adjust for everything, is there going to be a lower net expenditure next year? How do I read this? Second question again on the budget. During the speech, the finance minister is now saying that the DFCC will be commissioned in 2024. So when do you think that ordering will start? And then they have also said that the government expects railways to monetize DFCC by selling or leasing the assets. I really don't know. It was lacking in details. So how do you see the DFCC playing out now? Because they are already probably 3 to 4 years, maybe 5 years behind schedule on DFCC. So on the domestic side, how do you see wagon demand panning out? These are my questions.
Thank you very much. I'll answer your questions one by one. And I must, in the sake of full disclosure, mention that, the pink book which gives out the details, I have not been able to study that as yet. But based on the various interactions that I have had with the railway officials and limited study of the railway budget that I have been able to do, my answers are caveated by that condition. So as far as the budget...
Umesh, sorry to interrupt you. Also, I am quoting from the expenditure budget. Just for your information, because if you want to check later on, that's it from my side. Yeah. Sorry to interrupt you.
I will be getting the complete pink book in any case, which is being analyzed at my office's end. So just to give you a sense that last year the railways had floated in a tender of 10,000 odd wagons, but ultimately they ended up finalizing only 2,500 or 3,000 wagon orders. So probably what you are talking about, the reduction in the total expenditure in the last rolling stock is correlating to that. Our company received a very substantial portion of that order. We got an order for about 1,800 wagons out of this 2,500 wagons that was placed. So we are, as of now, we are comfortably placed as far as the order book is concerned. What we do understand is that the railways are likely to come out, and they made a wagon acquisition program for the next 4 or 5 years, and that is giving a very ambitious target. As you will be aware that there is also a target to double the freight earnings, and doubling of freight earnings cannot happen without substantive increase in wagons or in rolling stock. So we really do not see that there will be a curtailment in rolling stock procurement, because the railways have invested tremendously, even on borrowed money, in building up capacity, and if they do not buy wagons, they will never be able to monetize or utilize that capacity. And if they want to utilize the capacity, there is the only logical step for that is to buy more wagons. So we understand from our sources that the new tender is getting finalized, issuance of the new tender is getting finalized, and it is not going to be a bad quantity that they intend to procure. As far as the dedicated freight corridor is concerned, to the best of my memory, she said that it will be operational in phases from 2022 and will be fully commissioned by 2024. We do know that there are phases or there are parts of the DFC that are getting commissioned, and the work is going on pretty expeditiously. Of course, during the COVID, there was a bit of a slowdown, which is but understandable. But how the wagons will be procured, how the private sector will be brought into the DFC, it is something which is not yet fully clear. But what we presume is that the infrastructure will be given by the railways, and the wagons will be procured by private players, like in the wagon investment scheme or the container train operator scheme or the special freight train operator scheme, and they would be allowed to take the traffic or market the traffic. We believe that this will be a much more cost-effective and I would say forward-looking step on part of the railways to do so, because the efficiencies of the private sector with the infrastructural backbone of the government will be able to get the maximum results. So, the DFC is a reality, whether it is coming 1 year here or 1 year there. The wagon demand, when so much of thousands and thousands of crores have gone into creating that infrastructure, obviously that infrastructure can only be utilized if there are wagons commensurate to that.
Correct. I agree, sir. I agree. Thank you very much, sir.
Thank you.
Thank you. Participants, to ask a question, please press star followed by 1 on your touchtone phone now. We have next question from the line of Sriram Ramdas from Green Portfolio. Please go ahead.
Evening, sir. Two questions. I'd say it one by one. So, like you just mentioned, the first delivery for the Pune Metro project, aren't scheduled until May. But we are seeing revenues being booked under the Italian subsidiary. So I want to understand, where are these revenues stemming from? Is it from the Catania project, or are we getting milestone payments for the Pune project? How is it like? Thank you.
Sure. Pune project is only one of the projects that the Italian subsidiary has. The total order book of the Italian subsidiary stands at about between 250 to 300 million of euros, out of which Pune is only about 15 to 20 million euros. So the Italian subsidiary revenues are being booked by the different projects, whether it is Trenitalia, whether it is Catania, whether it is Metro Campania or Sexta. So there are the various projects that the Italian subsidiary is executing.
All right, understood. Thank you. And so secondly, what is the delivery schedule for the Pune project and the Catania tender? Like, how much percentage of the work have we delivered in this financial year, and how much do we intend to deliver in the next financial year 22?
As I mentioned, sir, that the prototype for Pune will be delivered by May this year from Italy, and the first train from India will be delivered by August of this year. And so we have not yet delivered any train for the Pune project. The same is for Catania. The Catania prototype is likely to be delivered, scheduled according to the contract. It is scheduled to go by September 21, but we expect that we should be able to deliver it a couple of months ahead of schedule.
Okay, so brilliant. So just one more question, if you can take it. I just want to understand the partnership we have with ABB. So what progress have we made, and will we see these new propulsion systems starting to generate revenues in maybe 12 to 18 months' time?
Yes, sir. I just mentioned that in my opening comments, that we are expecting the prototype along with ABB to be developed by August, September this year. And by end of this year, we should start production for the propulsion, which is in collaboration with ABB.
Thank you very much, sir. Thank you. Understood.
Thank you.
Thank you, sir. Reminder to participants, to ask a question, please press star 1 on your touchtone phone now. We have next question from the line of Nishit Shah from Qtr3 Investments. Please go ahead.
Good evening, sir, and thanks for this opportunity. Sir, I want to understand the tender pipeline for wagons for us.
Sure. The tender, sir, has not yet been floated as yet. As I mentioned a few minutes ago, that normally the tender floating is followed by after the budget. So now that the budgetary allocation has been done, we expect that the tender should be floated over the next few weeks. We cannot give the exact quantity because it's not been made public, but we do understand that the railways are planning substantive increase growth in their traffic targets. Therefore, we expect that the wagon quantities to be procured by the railways should be healthy. Having said that, as far as private sector is concerned, that's another positive kind of feeler that we are getting from the private sector, which has started finalizing orders. We have booked some orders during the last quarter from private sector, and which is very heartening to see, because during the COVID period, the private sector wagon demand had completely dried down, and that has come back again in the last month and a half or two.
Okay. So, sir, is there any Coal India tender out?
No, there is no tender out from Coal India. As we understand, Coal India is giving the mandate and the money to the railways to buy the wagons on their behalf.
Okay. And sir, are there any execution challenges in wagons division now, like wheel sets or any other, or everything is resolved?
No, wheel sets no longer is a challenge. Railway factory Bangalore has done a phenomenal job in ramping up production, and they are one of the cost competitive producers of wheel sets in the world now. The only limited challenge now, which I hope is temporary, is the continuing increase of steel prices, and that does bring about a little bit of a concern for the industry, although majority of our orders are with a price variation clause, but there is always a lag between the price variation that we get from the client and the purchase price of steel, because our price variation is linked to the wholesale price index, which moves at a lag of 6 to 8 weeks. So we do hope that with the government addressing the issues on import duties and all of that, the rampant increase of almost on a weekly basis of the steel prices will be checked.
Okay. And sir, I read somewhere that there were some shortages of wagons for logistic purpose. Is that true, that the demand was so strong?
Yes, the demand had suddenly picked up. The railways did not anticipate and this is again what we've also seen from media reports and based on various discussions that we've had, that covered wagons had become very, very scarce, and the railways did not expect that suddenly the demand for covered wagons will pick up in such a healthy manner. But then the railways was quick to finalize orders, and as I said, we received some orders and we've already started production for the covered BCNA wagons also.
Okay. Sir, what is our order book as on December or latest, if you can share, for India and consolidated basis?
Sure, it's given in the presentation, but I will just request my colleague Anil Agarwal to give it.
Yes, so it's around 5,100 crore, and it's more or less equally distributed between India and overseas.
Okay. And sir, wagon dispatch numbers for the quarter?
For the first 9 months, we have dispatched something around 2,000 plus wagon, and first quarter of course was very, very low, and it's more or less equally distributed in the second 2 quarters, more or less.
Okay. And sir, out of our order book, how much would be from private?
So about 80-85% of our wagons are now from railways, and about 15% are from the private. But this figure keeps on varying based on orders being finalized by private sector. Because private sector, unlike the railways, do not go for a mega tender. They finalize orders on an ongoing basis.
Okay. And sir, private would be more of fixed, and railways would have a price variation clause, right?
I didn't get your point. Sorry.
Railways orders will have a price variation clause, and private orders would have a fixed price contract, right?
That's right. Most of the cases.
Yeah. And sir, last question from my side. So, do we still target this net debt-free target by March 21 for standalone Titagarh?
For standalone, our net debt has already come down to around 65 crores in the end of December. Okay. And if you see from 2019 March, the net debt was
around 300 crore plus.
So more than 300 crores. So there has been a significant reduction. We are still trying, but of course, there have been challenges this year, as everybody knows. But our endeavor is still to target to get either become debt-free or near debt-free on the Indian, net debt-free on the Indian operations by the end of March.
Okay. Thank you so much, sir.
Thank you.
Thank you. To ask a question, participants may press star followed by 1 on your touchtone phone now. We have next question from the line of Vipin Goyal from ICICI Securities. Please go ahead. Mr. Goyal, your line is unmuted. If you have muted yourself, please unmute and ask your question. Thank you.
Hello, am I audible?
Yes, you are.
Yep. Sir, good afternoon. Sir, sometime back we had signed in a technology agreement for that gave us entry into the LRV segment. So that was under the metro coach segment. So have we seen any orders there? And if any, then what's the outlook there that you see?
So the LRV segment agreement that we had signed was to acquire the design rights for platform, which is basically Metro Light. As you would have heard in the budget speech of the Honorable Finance Minister, she announced that the next generation of metros for smaller cities would be introduced, which would be Metro Light and Metro Neo. So the design that we did acquire was a Metro Light design. The tenders have not yet been issued for these, but we understand that there are several tier 2 cities in India that will be going for Metro Light. And the acquisition of this design rights will enable us to compete in those tenders.
Okay. And then, sir, on the private wagon side, you commented that 15% of the current mix is private.
That's a ballpark that I've given, not exactly, but I mean, yeah.
Yeah. So, sir, broadly, just what's the demand that you are seeing there? Any particular, players or any large orders that you are seeing from this side?
So there are a number of companies that are finalizing orders. I mean, all the private orders, the only segment in the private business that has not seen new orders is the container segment, which is probably because of the reduction in the EXIM traffic. But apart from that, there is a healthy traction that we have seen in the WIS, in the AFTO, that is the automobile wagon. The steel companies or the cement companies are doing very well now, so that we have seen that they are coming up with renewed demand for buying wagons. So this is, the private wagon business is something which does not work on great deal of future for visibility. The tenders come up based on requirements, and normally the cycle time of tender coming up to ordering to supply is much shorter than that of a Indian Railway cycle.
Okay. And then, sir, just this one on the Navy side. So earlier we were quite positive on bagging orders from the Navy. Especially, I think we are in the special vessels segment that we cater to within shipbuilding. So any activity there considering the positive budget?
Yes, as I mentioned in my opening comments, we have and we are continuing to participate in different tenders of the Indian Navy. Some of them we have participated and we are well positioned, but we shall make necessary announcements as and when they get concluded.
Okay, thank you, sir. And then
we continue to remain positive.
Great. And then, sir, just last one on the capex side. We had spent some money in upgrading the Uttarpara plant. So is that done? And then if not, then what portion of capex would go into that apart from the maintenance capex? And then you can give the numbers on that.
So the capex is already ongoing. As I mentioned, that the first coach from our Uttarpara plant is likely to be rolled out in August 2021. The plant is being set up now. The capex work is ongoing, and we expect that by April or May, the bulk of the capex work will be over in the Uttarpara plant. I'm happy to state that most of the capex we are doing it by our internal resources, and we have still been able to, in spite of the capex that we have incurred in Uttarpara as well as in our other plants, in order to upgrade the infrastructural facilities of our plant, we have still been able to continue with our target to reduce the net debt of the company.
Okay, and so this, what will that number be on the capex side?
We have not disclosed the capex numbers, but all told, between all our plants, the capex that we are incurring or we have incurred in the last year or we incurring in the coming future year or couple of years is about 100 odd crores.
Great. Okay, sir. That's it from my side. Thank you and all the best.
Thank you.
Thank you. We have next question from the line of Bhagyesh Kagalkar from HDFC Mutual Fund. Please go ahead.
Yeah, hi, sir. So two clarifications. One is on the margins in the wagon division, means the private sector price variation clause in steel and the Indian Railway. Can you just throw further light and what is the strategy?
Yes, sir. Generally the EBITDA margin for wagons are at about between 9 to 11% at this point of time. Now, as far as the private sector is concerned, because of the abnormal price increase in the steel, in some of the contracts that were finalized before this abnormal price increase started, while we were able to block it as a matter of strategy, we always finalize the back-to-back contract as soon as we get the contract from our clients. So there the EBITDA margins might reduce by a percentage or two, but on a blended basis between the railways and the private sector, we should be able to maintain on the wagon business anything between 9 to 11% EBITDA margins.
Okay. And so the second question is on next 5 to 6 years, or say about 2 years from now. This DFC wagons has been spoken for a very long time that it will be for different wagon, etc. But so far date, a tender has not come. So actually, what is the realistic target in next 5 years? How much the wagon procurement in India will be? At least the Indian Railway and the private sector also. Roughly, you will have some estimate.
But the only basis that we have to give a number on this is the number that has been published by the railways. The railways came out with a 5-year business plan or a vision plan for procurement of rolling stock. In that 5-year procurement, they have, which is in public domain, they have expected that they will add around 2 lakh or something like that, 2 lakh or 2.5 lakh wagons. So that is a very
substantial number. 2.5 lakh wagons.
Okay. That's right. It's a very substantial number, and that's what the Railway Ministry has given as a forecast. This includes the Private Sector Wagon Act, that is the PPP Wagon Edition, as well as the DFC Wagon Edition.
Okay. So in 5 years' time, they expect this kind of procurement across all DFCs. Okay.
That's right. And we'll be happy to share that document with you. I will get that document across. Okay.
But the wagon related to DFC, which is supposed to be a different axle wagon and a costlier wagon, so far two orders have not been released by Railway. Am I right?
No, Railways have not finalized any orders. We have received some orders from some Japanese companies which are constructing the part of DFC, but they are not effectively for freight carrying purposes. They are more of a multi-purpose wagon for construction and some part of freight carrying.
Okay. Thank you, sir, and all the best. Thanks.
Thank you, sir.
Thank you. To ask a question, participants may press star followed by 1 on your touchtone phone now. We have next question from the line of Ankur Chadha, an investor. Please go ahead.
Hello. So my question is with regards to the employee benefits expenses on a consolidated basis. It jumped up from 40 crores to 58 crores. That's quite a substantial jump. So can you please throw some light on that?
The employee cost includes costs from Titagarh India as well as Titagarh Italy. So there is no increase in employee cost in India. There's an increase in the employee cost in Italy by €1 million, almost like 8 to 9 crores. Because of two reasons. One is obviously there has been a change in the exchange rate that was used in the last quarter versus this quarter, and then there has been certain increase in the temporary people because of the ramp up of the production. So as Mr. Chaudhary said in his opening remarks regarding the ramp up activity, so if from January onwards, from the last quarter, we started ramping up the production levels for which the temporary workload had to be taken. So that's basically it.
Okay. So would it be correct to presume that the employee cost flows in before you actually start booking the revenue for the product in Italy? So we're seeing the higher cost, but we are not seeing an equivalent amount of higher revenue in the Italian operation. Because once the product is
so obviously the level of volumes will keep on increasing. You will see much better volumes in Q4 and going forward in terms of the ramp up.
Okay. And is this cost also expected to go up more, or it probably stabilize at this kind of level, employee expenses?
There would be no increase in the permanent workload. Obviously, the permanent salary remains the same. So if it is required to increase the temporary in order to match the mismatch in the workload required versus workload available, so that would be higher at the marginal cost.
Okay. And when do we start expecting this Italian operation to be stabilized at an optimum level?
So as I mentioned, that the Italian operations, December 2019, we had for almost 4 quarters turned EBITDA positive, and then the COVID crisis hit us. And Italy, unfortunately, has been very badly hit amongst all the economies in the world. That kind of gave us a little bit of a jolt over the last 4 quarters. But we are fairly confident that 2021-22, which is the coming fiscal, we should be again EBITDA positive, and we are doing our best to make it net positive.
Okay. And in terms of this Metro Light technology, are there any other indigenous players in India who have this technology?
So in the metro segment, as you would be aware, there are only 4 Indian companies which are making metro coaches under the Make in India program of the government. Out of them, 2 have got merged. Alstom and Bombardier now have become one entity, which leaves Titagarh and Memel as the 2 other Indian entities. I'm sure that each one of the company would expand if they do not already have. Of course, Bombardier and Alstom already do have, but also BML would expand their product portfolio to include Metro Light because the market would demand so.
Okay. And in this, let's say, 12 months, are there any metro tenders which are coming up?
Yes, as we heard from the Honorable Finance Minister's speech, she has made allocation to several metro projects like Chennai, Surat, and in the past there were others done, Patna, Bhopal, Indore, etc. So we are expecting that a number of metro tenders should come out in the coming fiscal.
Okay. So that's it from me. Thank you and all the best.
Thank you, sir.
Thank you. To ask a question, participants may press star 1. We have next question from the line of Kashyap Javeri from MK Investment Managers. Please go ahead.
Yes, hello.
Yes, sir.
Yeah, thank you very much, sir, for the opportunity. I joined the call a bit late, but in terms of DFC plus the 10,000, I think in one of your remarks you also mentioned that last year the target was 10,000, but there was underachievement, and probably in this budget, given the provisions on rolling stock, there could be higher procurement. But over next 3 to 5 years, what's the size yearly tenders, or let's say yearly procurement that we are expecting from the government? So I understand FY22 you mentioned that because of underachievement this year, and looking at the budget there could be very strong procurement. But over next 5 years, what could be the number that one could probably expect?
As I was just mentioning a few minutes ago, that FY21 is an aberration year. We do not know.
Right.
We should not take FY21 as a benchmark year. But having said that, the only basis on which we can comment about the future potential of wagon procurement is based on the government numbers that have been published. And there was a 5-year plan for procurement of rolling stock published by the government. It said about 200,000 or 250,000, something like that.
Okay.
Wagons to be procured over the next 5 years.
Okay. Yeah, that's it from my side, sir. Thank you so much.
Thank you. We have next question from the line of Rahul Jagwani from NSIC Capital. Please go ahead.
Yeah, hi. Within March, our standalone debt has been coming down. But for the 9 months, the interest cost is only flat. So, I mean, what kind of interest cost should we expect now going ahead, I mean, next year? Because I think net debt is now 60 crores.
So, in the finance cost, there is some element of accounting done in compliance with the Indian accounting standards. So, there is a notional interest cost element also in that. But this finance cost also include, interest on cash credit, utilization, as well as the bank charges, the financial charges on the issuance of the bank guarantee letter of credit and all that. So, as we have already mentioned about, reduction in the overall debt position, so that will have some positive impact on the finance cost going substantially down in the near future.
Right. Okay. And can you just what is the debt in the Italian subsidiaries? An update on that? And
sorry, I didn't get your question. Can you repeat again?
No. Can you just update us on the consolidated debt also?
The Italian debt is at about, so the only other debt that we have is in the Italian subsidiary, that's about 700 crores.
700 crores. Okay, thanks.
Thank you, sir. We have next question from the line of Sriram Ramdas from Green Portfolio. Please go ahead.
Hi, sir. Hi again. I just want to ask, are we L1 or L3 bidder in any of the metro projects, in any of the rail projects as of now?
Metro projects, the tenders are likely to come out. I mean, some of them have been published and some of them are likely to be published. And if there are any ongoing tenders which have not been finalized, we would not like to comment upon them at this point of time for competitive reasons.
Okay, not comment. That makes sense. Brilliant. Thank you very much, sir. Thank you.
Thank you.
Thank you. We have next question from the line of Akash Damani from Edelweiss Financial Services. Please go ahead.
Hi, sir. Most of my questions have already been answered. Just if you could give some guidance for FY22 and 23, revenue and margin guidance.
So we do not give a forward-looking statement or a guidance as a matter of policy till now. But what I can say is that I mentioned in my opening speech about the different various business segments. Historically, the only business segment that was contributing was the freight wagons or the mobility on rail. That would continue to be stable as we expect over the next couple of years. And the new business segments that would start contributing to both the top and the bottom line would be the passenger mobility or the transit and propulsion business, and to an extent the shipbuilding business. So based on that, the new segments that the company has been working on over the last few years, we should start seeing the revenue recognition partly in 21-22, but fully in 22-23, or I would say substantially in 22-23.
Okay, sir. Thank you.
Thank you. Thank you. As there are no further questions from the participants, I'd now like to hand the conference over to Mr. Ranjit Sivaram of ICICI Securities for closing comments. Over to you, sir.
Yeah, thanks, Vikram. I take this opportunity to thank the management of Titagarh Wagons for giving us the opportunity to host this call. I thank all the participants. And sir, do you want to make any closing comments, or shall we?
No, I think the presentation that has been circulated also gives the targets that we had set over the last few quarters that I have been interacting after our quarterly results with investors. And I think our endeavor has been to achieve those targets that we have set for ourselves. And you would see from the presentation that some of them we have been able to achieve our targets. Some of them we are on our way to achieving our targets. And I would only like to state that the budget that has been announced day before yesterday in the Parliament is something which is very kind of heartening for companies like us, since the whole policy of the government is to encourage Indian manufacturing and infrastructure build. Our company is primarily into the infrastructure space and creating infrastructure for the mobility solution. And therefore, we see that for all the verticals that we have, there is a good opportunity that lies forward. We have been able to upgrade ourselves both in terms of management processes, IT processes, plant infrastructure, and so on. And we believe that over the next few years, we will be able to get advantage of the work of the investments that have been put in over the last couple of years to this effect. So with those words, I would thank you everybody for joining this call and your continued support to the company.